All right, so in this video, we're going to cover trend lines. And trend lines is one of the three major tools that you can use to actually determine the trend in the market and actually determine the structure in the market. But trend lines are really important because they're psychological areas, just like zones, to where price can may or may not have a reaction from. But if a trend line is a good trend line, a lot of times price will respect it and you can game plan a strategy around trend lines. Now, basically, what a trend line is, it's just marking up a swing point from one swing point to another swing point in the markets. So if we use this for example, where this is in a selling trend. So if I use the trend line here, what you see is that price respects it, over and over again, and then eventually, it gets broken. But for a while the trend is in play, because trends aren't permanent, but while the trend is in play, price will respect it. How do you, properly draw a trend line? So the first thing that you got to know when properly drawing a trend line is to first look for a swing point in the market. Because as you know, the market consists of swing highs and swing lows. Then from there, you're going to take, if it's a selling, like a bearish market, your more important trend lines are going to be in the top side of the market. If it's a bullish market where you're seeing higher highs and higher lows, you're going to want to put your trend lines in the bottom side of that market, because that's the higher probability. If you're trading off of a trend line in those correct areas, what you're doing is you're trading with the trend. But if you're in a selling market and you say you're putting a trend line on the bottom of the market, you're trying to buy against the trend. And as you see, there wasn't much reward in buying against the trend. You had these small moves here that took forever to happen, and those small moves here. But would you rather catch those small moves that are low percentage, or the bigger moves that are higher percentage? So for me, I like being efficient with trading. So I like picking the bigger moves that are higher percentage, because I don't want to be trading too much. And that's a whole other lesson. You don't want to over trade, and put your account in exposure too many times. So with trend lines, you want to go for the top, because you're going to be trading with the trend on a selling. For buying, see if I can find a buying example real quick. I think this one was kind of selling off. We'll use this. Not the absolute best example, but it'll work for this. For a upwards trend, you want to use the bottoms, because as you see here, the market had bigger moves going up than going down, because that's the trend. So the other thing that you want to know with a trend line is you want to have a decent space between the different points. You want to have a relatively equal space between the different points. So if I was to kind of illustrate that, I put this box and I clone this box and do a copy of it, what'll most likely happen is it'll be similar in distance. May not be perfect, but similar in distance to the next hit. So this was just a little bit off, which is completely fine, but it was a decent distance between the two. A lot of your good trend lines are going to have equal or relatively equal distances in between the trend line. You don't want to have a trend line where you're doing something. See if I can find an example on the spot. Once you train your eyes, it's hard to find bad trend lines, but where it's something like this, where you have basically this touch, that touch, this one, and then way over here, this one. See, that's not relatively equal in distance. It's okay to maybe have a trend line like that, but don't really count this as multiple touches. You want to count that as one touch. You want to count that as one touch. Reason being, because they were clustered together and you had another touch further down. The third thing when it comes to drawing these trend lines is that you want to be able to get a lot of touches on that trend line. So you want to be able to draw one trend line and price respect it multiple times. You can draw the trend line from, some people draw it from body to body. So if I zoom in so you can see this, some people draw it from body to body, which would look something like that, where you overlap the wicks. Some people put it on the top of the wicks. I like doing, more so the wicks a little bit, just if it's not a ridiculously high wick. If it's just like where the body is close to the wick, I'm fine with putting it on the wick. If it's just a really long wick and I know it's like a news spike, news spikes are not considered market structure. They're just anomalies in the current price pattern. So I don't consider news spikes a market structure. So if there was a wick that kind of just went up like this, I would still use the body, because that wick is just there to manipulate the market and throw traders off. So with trend lines, it could be multiple trend lines within a trend. So you have a trend here, you have a deeper selling trend within the bigger selling trend. And what confirms a trend line, like to where you could actually start to draw it, is you have 2 points in the market. So say if this hasn't happened yet, say if that hasn't happened and price is right here, I can see that here and here are 2 swing points in the market where prices, went up to it and then came down. So I can draw a trend line there and wait for another touch of the trend line. And then when that other touch happens, it may or may not be a trade for me. But if it matches up with my other criteria for trading, this could be another evidence. You want to build a case for trading, for placing a trade. This is be another piece of evidence that would support your decision to actually place a trade here. So the last thing that you want to know with trend lines is that the deeper the angle, like the more steep the angle is the stronger the trend. So you see this one is a very steep angled trend. But let's zoom out a little bit. Let me see if I can find a shallow trend, one that's not very deep. Here, this uptrend here. See how that wasn't very, it's kind of wide, it's not steep, it's not like this. This would be a strong uptrend. That would be a weaker uptrend. And you see how it soon, because of that was the trend, it was broken because that was a weaker uptrend. And then it led to the downtrend, which was steeper. So this downtrend is steeper than this uptrend. So this downtrend is the stronger move. And that's how you would use, trend lines to assess trend. So just to recap, a trend line you want to use is something that you use to measure different swing points in the market to justify what trend they're in. The second thing is that you want to have your trend line be relatively equal in distance between one swing point to another. The third thing is that you want to use the correct points in the market, not using big wicks like this. See, this wouldn't be trend line worthy, but you want to use the correct candles to place your trend lines on. So you can either go through the body to body or wick to wick. That's completely up to you. And then the last thing is that the more shallow the trend line is, the weaker the trend. The steeper the trend line is, the stronger the trend. So I hope this video helps out, and this will give you the example of how to actually use trend lines to determine trend.